It was a dark and stormy night. Beneath the dark Charleston skyline, its residents yearned for the coming dawn of lowered interest rates and the prospects of waiving of capital gains taxes. You always hear the saying, it's darkest before the dawn. Let me take you back a few hours to today's sales meeting. It went kind of like this. We were going around the room going, what are you seeing? What are you seeing? One agent said, it's been brutal out there. People are coming down, but everyone's afraid to buy. Everyone's on the sidelines. What are you hearing? I'm just talking to people. No one wants to do anything yet. It's like they want to sell their house, but they don't. They're afraid to move. Their interest rates are high. They're afraid of the capital gains tax. And then you'll have another agent. Oh, I had this investor came down and he put a $5 million beach property under contract. This thing generates like $400,000 a year. We actually got a great deal. It's huge. It's like 6,000 some square feet. And he was super happy. We're really seeing this. The investors are taking advantage of the lowered sales activity, and a lot of retail buyers are still on the sideline. Let's start with interest rates. So interest rates, if you haven't been paying attention, are down about 0.5%. They kind of keep hitting that 6.4, 6.45, and it'll bounce that back up to 6.5. We were at as high as 7.25 not too many months ago. So we have come down. A lot of people really haven't paid attention to that. We do see, and nationally, as we get those days or weeks, it does get below like 6.5. When it gets below that, we see a big activity and sales on a lot of contracts are getting written because people can lock in those rates. The writing on the wall, the tea leaves, and this is just not me wishful thinking. This is like people like 𝐏𝐫𝐫𝐬𝐬, and you'll see other bond traders. We're really seeing the projection is that rates are going to start coming down. The Fed's already talked about with the increase in unemployment. There's been a little bit of increase in unemployment, especially in minority unemployment, which has got the politicians like a little worried. We're seeing that increase in unemployment, a reduction in commercial activity, and that's really probably going to get the Fed to finally move. They're probably moving way too late and might need to accelerate rate cuts. But the writing on the wall is that this September, we might actually see some rate cuts. And I think that's a pattern that's going to continue as the economy slows down here and the government will need to step in. So where do we see rates going? This is Oliver. This is my personal opinion. And this, I'm a guitar player. I always say, my guitar style is, a really bad attempt to replicate my 20 favorite guitar players. And that's the way I am with interest rates. My opinion is based on about 5 or 10 people that I really, truly follow. The number one person being 𝐏𝐫𝐫𝐬𝐬. If you look him up, he's been calling for rates just below 6% for quite a while now. He thinks that's where we're gonna land here. But once we see rates continue to go down, we're gonna see more people jump in, and there will be this Goldilocks time where the sellers aren't really aware, so they're not raising their prices, and a lot of buyers aren't aware, so the savvy buyer can come in and lock rates, hopefully 6.25, 5.875. I think that's where it's gonna kind of soft land. So there's gonna be this little Goldilocks period where no one's gonna know buyers or seller, and you're gonna be able to take advantage of lower rates. What will happen eventually is people will jump into the market, and that could, I'm not talking huge price escalations like COVID, but that could put upward pressure on housing. For the last 2 years, housing has been appreciating at a rate below inflation. So even if your house went up 1 or 2% the last few years, you've really lost value in your home, because I know inflation is like 2.6%. I don't buy that for a minute. I really think the real inflation figure, the true inflation figure is probably like 3 or 4. But housing prices have been appreciating below the rate of inflation, and it might increase to kind of catch up with inflation if rates continue to come down. So it is a good idea to get out there and start looking if you are in a buying situation. Here's another thing. I touched on rising unemployment. There's been a real slowdown of commercial activity, and people are reaching out to their politicians. There have been calls on both sides of the aisle to call for some sort of housing emergency or some declaration that we're going to address for housing to incentivize it. And one of the things that I keep hearing, and there was actually a bill introduced not too long ago, is the idea of possibly waiving capital gains taxes on properties. What would happen if they were to waive capital gains taxes? Well, it would cause a lot more people to sell, and it actually could allow for prices to come down a little bit and people to actually net more money. Let me give you an example. Let's say you bought your house in 1993 and you bought it for $400,000, and now you're looking at selling it for $1.2 million. You're going to have a pretty big capital gains tax. Even let's say you're married and you have that $500,000 exemption, or even if you're just single, it's your primary residence and you have that $250,000 exemption, you're still going to get hit with some capital gains. If they were to waive that capital gains tax, instead of selling it at 1.3, you could sell it at 1.25 and still come out a few $100,000 ahead if you don't have to pay for that tax. So this is something that I think, now, do I think it's going to be 100%? I think it's like 70-30. They'll do something. And I have a feeling it'll probably be for owner-occupied homes or possibly second homes, not rentals. Because rentals, if you have a rental, you can still do a 1031 exchange. If you don't know what a 1031 exchange is, you need to hit that subscribe button because we talk about that a lot on this channel. So if you don't know what it is, hit the subscribe button and you'll come to learn this. Maybe we'll put a link on here for another video that has to do with 1031 exchanges. So if they were to ease or possibly do a moratorium on the capital gains tax, I think you would see a lot of the boomers who have been, they're like, oh, I want to sell this property, but I'm going to have $400,000 in capital gains. It doesn't make sense. I'm going to wait till I pass away. That could be in 20 years. I'm going to pass away and put it in the will for my kids. What happens there? There's a step up in value and a lot of those gains will be wiped out. So they're talking about doing something with the capital gains to spur people to sell. So even if prices were to come down a hair because they did that, the sellers would still net sometimes hundreds of thousands of dollars more than they would even selling at a higher price. So that's something that we see coming around the pike. The bottom line and the takeaway is this: we're reaching a tipping point. It's not about the economics, okay? It's about the way people feel about the economics and what that means in the voting booth. So once politicians realize that their constituents are hurting, they're going to be the ones that don't want the blame. They're going to try to put the blame on the other side. So what you're going to start seeing people coming out with programs, the Fed continuing to pressure the Fed to lower interest rates. You're going to see calls on both sides of the aisle to encourage affordable housing. And I don't think that's going to be the solution because you can build more affordable housing, but if interest rates are still 6.57%, they're going to need to get those rates down so that affordable housing is actually affordable. And then lastly, I think you're going to start seeing some tax policy changing. I'm not sure if it'll be permanent. I have a feeling it will be kind of something that starts maybe retroactive to this year and sunsets in 3 to 4 years, but maybe they'll address something with the capital gains. But I do want you to mark my word here. It's always darkest before the dawn, and that's when you need to jump into a market. Once they come out with all of these issues and once they really start lowering rates, there'll be a little golden time. But what'll happen is if rates really come down, I think you're going to start seeing that fall accelerate. But if rates really start coming down, that could put an upward pressure on prices. There could be, kind of a Hail Mary, which I think we're going to see something along these lines. I don't know what it'll look like, but I think there will be something having some tax policy changes having to do with capital gains. So this is all very interesting stuff. to get kind of into your mind, because the consensus is, and Congress is seeing it, the executive branch is seeing it, the Fed is finally starting to see it. Something needs to be done to reinvigorate the housing market. We've got a lot of people locked into houses. What do I mean by locked in? They're locked in by a $400,000 impending tax bill if they were to sell their home that they've been in since 1983. By the way, do I believe that's fair? No, I think it's theft. If you bought a house for $100,000 in 1983 and sold it, I think I did the math, like for $850,000 today at 4% inflation, which is what we've been averaging since then, $100,000 to $100,000 now is worth $832,000 today at 4% inflation. However, the government could tax you on $300,000 if you're married, or $500,000 if you're single. So they could tax you and you'll actually end up losing money in real dollar terms. So I kind of view it as a form of theft. That's my personal opinion. You might differ, and that's okay. If you do, leave me a comment and tell me why I'm wrong. However, I think these things are going to be addressed by the Fed, by tax policy, and other incentives that are geared towards getting all the billions of dollars, the millions of people and billions of dollars that are all on the sidelines, to get them to jump in so we get back to at least a healthy, I'm not talking about getting back to COVID, that was unhealthy on the seller side, but back to a healthy, stable market. And again, I think it's darkest right before the dawn. I think these changes are going to start happening this month, especially with the Fed and interest rates. And then soon down the pike, I think we might start to see some tax policy, whether it be permanent or at least temporary. So again, if you want to hear more information, smash and hit the subscribe button, like this video, and we'll get more to you. Again, this is Oliver Caminos with St. Germain Properties. We'll talk to you soon.